All right, y'all, back to work. Hope you guys made some money out there today. Boy, a bit of a slow start this morning, but we finished the day today with a nice strong pop higher into this beautiful sideways trading range. Now, ranges, whenever we see a strong pop into a range like this, it usually means breakouts are where the money is made the following day. Now, every breakout's different. Some breakouts we trade with. Other breakouts we trade against. So in tonight's video, I want to talk about which breakouts you want to trade with tomorrow and which breakouts you want to trade against. By the time we're done tonight, you'll have a masterclass. You'll be an expert on making money trading with or trading against those breakouts. So charts look pretty good tonight. Enough of the intro. As always, thanks for tuning in and supporting our channel. Let's roll our sleeves up here right now and go find some more winning trades for tomorrow. The S&P SPY is already in front of me tonight. Nasdaq, triple Qs are already. I have two very simple but very important clues on the charts in front of me right now that are telling me where I think the winning trades are waiting for tomorrow. One of those big clues is right here on the hourly chart. It's very easy to see we are bullish overall on the hourly on the S&P SPY, bullish overall on the hourly, the Nasdaq, the triple Qs. I like to use these hourly time frames as an overall directional filter. So one very big clue, one of two clues for tomorrow. We're bullish overall. That is our focus as far as our directional filter. Now, I have one, what is probably a more important clue on some faster time frames, some tick charts to help us time the best breakout entries for tomorrow. Before we dive into those tick charts though, let's check schedule for tomorrow because we do have some news tomorrow morning I'm watching on my radar. And that of course is that Philly Fed Manufacturing Index at 8:30 Eastern Time. We'll keep listening in for updates out of the peace talks in Ukraine. We'll keep listening in for updates regarding tariffs with China, Europe, Canada, Mexico. Those are things we're continuing to watch here closely in our trade room. But we definitely know tomorrow that Philly Fed Manufacturing Index is probably the biggest news we know about tomorrow morning. The biggest news of the week, though, is that PMI number on Friday morning. We'll come back and talk about that in tomorrow night's video. So make sure you tune in later on in the week. But let's get back to our charts, though, because I mentioned earlier, I like to use the higher time frame for the bigger picture. That's great, but you know what? These hourly charts, they're not going to help us time the entries for tomorrow. Let's now drill down to some faster time frames. I like to use tick charts to find entries in our trade room. All these time frames, of course, your upper left-hand corner, that is a 7,000 tick chart. And if you're watching for the first time right now, this is the 21 EMA. It is pretty much the only indicator we use to find winning trades each week. There's another really, really big clue here, and then it's two different ranges. I mentioned earlier, we got that strong pop up into a trading range, but look where we came from. We came from a sleepy range earlier on in the session this morning. Now, why would two ranges be a big clue? Well, because the most recent range is a magnet. And of course, the previous range is begging for a breakout pullback. So we talked about earlier how certain breakouts you want to trade with and certain breakouts you want to trade against. This is a great example of a breakout you want to trade against. And I have three different ways to time the perfect entry trading against that breakout. We're going to cover that in more detail as we go deeper into this video. Now, think about this too. What do we know about ranges? Ranges love to rotate up, down, up, down, up. And because we are overall bullish on the hourly, we're also more inclined now to trade a breakout going higher. This is where that higher time frame, that hourly chart, comes in handy. If we trade higher, we want to trade with that breakout. And I have three different ways to time the perfect entry trading with that breakout. And we'll cover that a bit later on in this video. So one of my favorite trades here, I would love to trade against a breakout going lower. If I can get a breakout going lower, I want to trade against it. And the way I do that is I wait for rookies to chase it lower, let them try once, higher high, let them try twice. Once I have two tries like this, now I know where their stops are, and I can use their stops to fuel that move going higher. Now, as it goes higher, I love to add to this winning trade by looking for some separation off the moving average, a higher high in price, and getting in again, adding to my winner right below that low. Now remember, ranges love to rotate. So if we do get a breakout going lower, I'm going to measure the amount below the range. I'll project that back above the range, and that becomes our final target on the runner going higher. So one easy way to trade against a breakout is to look for a bear trap, one try, two try, buy into those stops. And as always, if you want to make more money, add to your winners, get that separation off the moving average, that higher high in price, strong green candle closing back above the moving average. Great way to add to a winning trade and make more money. Now, I mentioned earlier, I would love to trap in some of these bears down here, but sometimes we don't get it. Sometimes there's so many buyers down here, we'll break out lower. I don't get the chance to trap the bears in, and it just whoop and runs right back up again. If we V-bottom off this low, what I'll start doing is trying to buy as low as I possibly can. And to do that, I'm gonna mark a trend line off the highs. I'm gonna bring that trend line down around that low. Then I'm gonna look left. I'm gonna find some of these prior swings. And what I want is, I want the first test, the first entry off the low of that channel. Now, my favorite is getting in right below a prior swing. Another favorite of ours in our trade room is to get below the 21 EMA, let bears try twice, use that two try bear trap, and squeeze those stops running higher. So again, not ideal, but if I don't get that bear trap down below, I'm gonna find the next best entry, buy that first test. First test is always the best test off the low of that channel. So again, when I go lower, I want to trade against a breakout. Now, what if we go higher here? If we go higher, see, now I can start trading with breakouts. Now, here's one easy clue. As we start going higher, I'm looking for a very small but very important clue, a shallow pullback and a higher high in price. If I can get that separation, remember, separation equals strength. When we jump up like that and barely pull back and miss the moving average or just a little tap it, right? Once I get that higher high in price, now everybody piles in on that first chance to trade with that breakout. We call these bear traps in our free video classes. It's a very easy way. Strong pop up, separates, higher high in price, strong green candle, closing above the 21 EMA. Now remember, the breakout leg is a measuring leg. I can pin that now at that bottom, and that tells me now where that final target will be overhead. Measured moves, ABCDs, are very effective at timing the perfect exit when you trade with that breakout. Now, one more though, once we break out of a trading range, now we look for a breakout pullback. This is one of the best parts about ranges, because once we break out, then we look for the breakout pullback. Now, when I think about a breakout pullback, the first thing I think of is a two-legged pullback. One leg below the moving average and a symmetrical second leg lower. Think about a measured move. That is the formula I use to find the perfect kind of two-legged pullback or breakout pullback. Again, ideally, it'll line up right around the prior highs. What was resistance can be used as support. Now, remember, I'm not going to pick a bottom on this. I don't want to blindly buy that because it may keep going a bit lower. What I'll do though is wait for that pullback to that moving average. Remember, if we have a lot of momentum now going higher, this is a horrible spot to be selling. You're basically selling low after a deep pullback right into key area support. You would never want to sell right there, which means it's a great spot for a bear trap and an add-on. Let those bears try once, let them try twice, squeeze those stops. My mentor would always say, think about where their pain is. Think about if you were caught short, where your stops would be, where your pain would be, and buy right into those stop losses. Where's the market want to go? The market wants to go back up and take out that high. That is where our targets go. And as always, want to make more money? Add to our winners with that same add-on trade I mentioned earlier. So if we do go with that breakout, with that trend, it's going to be that initial trade getting in below the low. Think about that measured move, that two-legged pullback, that bear trap into add-on and back up and retest the high. Now, I have a couple more variations of these I want to talk about over on the Nasdaq. Before we do that though, let's slow down for a second because I know most folks watching right now, you know these patterns, you know you love bear traps and add-ons, you guys are making money with these already. But if you're here for the first time right now, this might be a brand new strategy, a brand new language. What the heck are failures, traps, add-ons? I get it. I do look at things a bit differently here on this YouTube channel. But don't you worry though. I teach this entire system, this entire roadmap. In fact, I have a ton of examples of bear traps, add-ons, breakouts, trading with them, trading against them. I have so much more I want to share with you. I can't share everything here in these YouTube videos. What I'll do is I'll put a link up top there for you, upper right-hand corner, hit that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room that literally tells me exactly where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current indicators or your current trading strategy, hit that link that popped up there. Watch that free video course. Everyone loves the trade examples I share in that short video series. The best part is it is 110% free for you. And also be aware to keep in mind, guys, I'm going to put all the important links you'll need to learn the strategy, watch all the extra trade examples. I'll put everything you need there in the description of the YouTube video. Definitely start first on the free video course. Most folks start making money all on their own, all from that free video class. So start there first. And if you're on Twitter or X, I post a ton of charts and videos and mindset stuff during the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn the entire system and hopefully earn a lot more because of it are linked up for you there in the description of that YouTube video. All right, so now where did we leave off? Yes, we're talking about trading against breakouts, and I have a couple more examples of ways in which we trade against breakouts. We're going to cover that in a moment here on the Nasdaq. And I mentioned earlier, right, as we trade with the breakouts, I mentioned that breakout pullback. Now, we don't always get a breakout pullback whenever we see a range breakout, right? Let's talk about, because sometimes that breakout is so strong that we don't get a breakout pullback. So how do we deal with scenarios that don't give us breakout pullbacks? Let's cover some more variations of this stuff now over here on the Nasdaq. Over on the Nasdaq right now, starting off first here on the hourly chart. Remember, I like to use the hourly chart not for planning entries, but to give me the overall directional filter. So we know right now the buyers have full control, and that tells me ultimately which breakouts I should trade with and which breakouts I should trade against. It's a very, very important filter. Now, I want to dive into some more variations on some tick charts, but if you're enjoying this video right now, please help me grow this channel by hitting that like button. And make sure you subscribe because YouTube rewards me every time you like, share these videos, and subscribe to our channel. I know we're all busy people these days. I appreciate you guys spending a few minutes with me every evening here on these videos. So thank you so much for all the likes, subscribes, and all the ongoing support. Now, let's roll our sleeves up, get our hands dirty here on some faster time frames, and talk about the Nasdaq. Over on the tick charts, on the Nasdaq right now. Very similar, and again, this is a 4,000 tick chart, all the time frames there in the upper left-hand corner. Very similar, but a little bit different here on the Nasdaq. First things first, you'll notice that pop up into that trading range. Now, look what I've done on this range here. I mark up the range, but then I find the amount above and the amount below. We call these pendulum swings. You'll learn this technique in that free video class I mentioned earlier. So what that tells me now is this area is a really big area of support. This would be a great area to trade against a breakout, right? Against a breakout. And of course, I mentioned earlier that if this is a bull range, if we go above these highs here, this is where we can trade with breakouts. I have one very important trade I want to share with you if we go higher. But there's one more important clue though here on the Nasdaq, and that is that strong move going lower. Notice how these pullbacks, they separate away from the moving average. Remember, anytime we see a strong move, a shallow pullback, and a higher high in price, what does that tell us? It's a lot of strength. That separation is strength, and no surprise, right? No surprise. Everybody came in and bought, right? We call these add-on trades, right? Add-on trades. We mentioned this was earlier here on the S&P chart. So remember, anytime we see a separation like that, pulls back, barely misses, that means strength. Now, why is strength important? Well, because whenever we see a strong move like this one, strong move down, think of this as kind of unfinished business, right? Whenever I see a strong move like that that separates off the moving average, we know that sellers are going to try to take out that low before they resume the overall bullish trend. So I'll tell you right now, if the trading gods are watching down on this video right now, what I really want right now tonight and tomorrow is I would love to get a nice strong run down. I would love to take out that low, finish the business, finish the unfinished business, and then again, use that same bear trap, right? Bears once, bears twice. Remember, always higher high. That way we recruit all kinds of sellers and they can use their stops to squeeze it higher. And then again, like I mentioned over here, as we go higher, look for that separation off of that moving average and go in for that buy right below that low. Again, basically a bear trap into an add-on. Bear trap into an add-on. Now, one variation of this I want to remind you about, and that is sometimes what happens is sometimes we get a really strong breakdown to kind of close one of these gaps, if you will, right? Kind of finish off a retest of that low. We oftentimes will get a 1-2 bear trap. We'll get a nice strong run back up. Now, in my free video classes, I talk about trade management a lot. I like to use a 1-to-1 stop to target. What I'll do is I'll get that 1-to-1 target. I'll move that stop up to point of entry. But sometimes what happens though is the strength of that move down is so strong, the bears will come in and they'll hold the underbelly of that range. Remember, ranges love to break out pullback. In these situations, we oftentimes will see bears come in and whack that thing right back down again. Now, please remember, we're overall bullish on the hourly chart. So this will seem like a very bear, at this point, this will feel very bearish, but again, don't lose sight of the higher time frame. This is a horrible spot to be selling, and therefore it's a great spot for a bear trap. We'll do it again. These double bottoms, we call these retest trades in our trade room. We grab the initial move down. We almost always get that first 1-to-1 target pretty quickly, but it doesn't keep going, right? It doesn't keep on ripping, going higher for us. It rolls over and retests the low. Now, the way I think of this is anybody who sells on that pullback, they're going to buy their way out of their position back when they retest the low. That's their profit target on that trade short. So again, horrible spot right there to be a seller. If I can get rookies coming in, I assume these are rookies because professionals would never take this trade down here. Once those rookie bears get caught, now we can squeeze their stops. We can add to our winners. We keep using those bear traps and add-ons. Remember, the entry techniques, they don't really change very much. We reuse the same entry techniques, trap patterns, add-on patterns, right? Two-legged pullback patterns above the top of that range here. We use these entry techniques over and over again, but we use them in slightly different ways based on the chart we're seeing that day. So again, it's a bear trap, it's an add-on trade. In this situation though, it's a strong run down to take out that low. It retests again. Again, this is not a reversal. It's a lot more than that to be a reversal on that hourly chart. So I love those double bottom retests, those retest trades. We see a lot of these in our trade room. And then one final variation, and we'll talk about one more breakout pattern going higher here. Again, there's a few more ways I want to trade with that breakout. We'll cover that here in a moment. What if we don't get, what if we go lower, we bounce back up again? If all we get is a really shallow pullback right now, I want to try to get in as low as I possibly can. All right. Again, the goal here is to run lower, get down to key support, right? Trap the bears in, squeeze those stops. If I do that, I can risk small to make a pretty big reward on that. The risk reward ratio on a really big breakout lower is really nice. It's a very attractive trade for people. But if all we get, for example, is a small run lower, and then we start going higher here, yeah, see now that risk reward ratio isn't nearly as good. So whenever we see a shallow pullback like this, I want to be a buyer, but remember, the best way to buy as low as possible is to look for that same type of add-on trade. These are what are called technical bear traps. You'll learn this pattern in the free video class. But think about now, as we start to go higher here, the bears try once, the bears try twice. I want to get in underneath that low. That way, my risk reward ratio, see how much better that one is, right? That small risk compared to that big reward, that is a more desirable trade. And because of that, a lot of other traders will take that trade and will benefit from the self-fulfilling prophecy. So one thing you want to remember is shallow breakouts, right? Shallow breakouts, I want to trade against them, but it's a small adjustment in the entry tactic. I don't want to buy as we're going higher like that, because again, now my risk, right, reward isn't very good anymore, right? So make sure you know that very small detail. Now, I mentioned earlier on the S&P, I love the idea of a breakout pullback. But again, we may not get that breakout pullback. So what are a couple more variations up here that we could use on this? Well, one of them is a pop and grind breakout. Pop and grind breakouts are very common. Sometimes the price will break out. Again, it's going with that trend. It's going with the overall 60-minute direction. And because of that, we want to trade with that breakout. But whatever happens is, though, we don't get the breakout and the pullback. Price begins to grind and grind and grind. If this happens, remember this, a grinding market is a very strong trend. Grinding trends are very difficult to stop. So because of that, I can be a lot more aggressive on my entries. What I'll do is I'll draw a trend line off the highs. I'll anchor that trend line off the lows. And as always, I like to look left, find some of these prior swing lows. And my goal is always here to get in below one of these prior swings. That's where traps live. I can also use the 21 EMA. Again, let those bears try a couple times, once, twice, squeeze those stops. And one real cool thing about these pop and grind breakouts is the size of that pop leg can be used as a measuring leg. So for example, if we do see a strong pop up, before it begins to grind like this, the size of that pop leg can be used as a measuring leg. Remember, the size of the first breakout leg, anytime we see a range breakout, the size of that breakout leg can be used as a measuring leg. These are a little bit more tricky, right? Because you got that grinding movement in between. The bottom line is the size of the breakout leg, that's your measured leg. Now pin it. Once we know where that bear trap, where the lowest part of that pullback is, now we know where to anchor it off of. And as always, if you want to make more money, right, don't trade more often. Don't trade more setups. Want to make more money? Hold on to your winners. Add to your winners and hold on to your winners. And one of the easiest ways to hold your winners is to know how to calculate these measured moves. A pop and grind breakout is a very good example of that. Now, one last variation, then we'll wrap things up here, and what might be my favorite variation. We may pop up, you'll notice lately here, we've seen a lot of these pops into ranges. Pops into ranges. We may see one more of that tomorrow morning. We may go higher here into a new trading range. Now, these are really easy because as I mentioned earlier on the S&P, whenever we have a new range, that range becomes the magnet. The previous range becomes a breakout pullback. This is one of the most consistent trades we've seen in our trade in the last 2-3 weeks. We saw like a dozen of these last week, I'm sure you recall, if you're with us in the trade room. So that trading range, right? That trading range below us is a magnet. And of course, ranges love to rotate. So it's a bullish range in an overall bullish hourly chart on the Nasdaq and the S&P. So if we go lower here, I want to trade against that breakout And the key here is we look for the prior range as a breakout pullback. We use one of those bear trap trades, right? 2 tries, squeeze those stops. Now, the reason why I love ranges so much is because unlike an ordinary trade where you take your profit target back off of that high, ranges love to rotate, don't they, right? So now, as we add our failure, as we add to our winner there, we now know the amount below that range can now project back above that range, and that creates our final target going higher. So remember, if we pop into a range like this, use the previous range as a breakout pullback and really focus on trading that rotation off the low of that trading range. Now, we may get something like this. We saw the market go up like that. We may get something like that tomorrow too. So remember, if it pops higher here and goes into a trading range, don't get fooled by that run going higher. Now remember, if we see this thing if price pops higher here and we start seeing that separation, that higher high, you know what I mean? If we see that pattern set up I mentioned earlier on the S&P, then that's a breakout. But a lot of times we don't. A lot of times what happens is we'll go higher here. We're not going to get that continuation, that separation off the moving average I described earlier on the S&P, and this thing will just slice right back down again. Now, these are easy if you know what's happening. These are scary if you don't know what's going on because that will feel like a reversal. It's not though. Measure the amount above, measure the amount above, or the below. That creates your area of support. Again, this will feel like a reversal, right? To a rookie trader or anyone who hasn't watched my videos yet, a rookie will think this is a reversal. I used to do this all the time when I was a new trader. So don't take the bait, right? Don't get trapped on that move going lower. You do the one who does the trapping, right? Don't be the trap, right? Or don't be the victim of a trap, right? Be the one doing the trapping. Let those bears try twice, trap those bears in, and squeeze that stop running higher, the amount below, the amount above, and keep trading that rotation. And oftentimes, this is the one now that breaks out, pulls back, and we use that same game plan we talked about earlier here on the S&P. All right, guys, that's the game plan for tomorrow. Now you know which breakouts we trade against, how we do it, and which breakouts we trade with. Now, speaking of tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets is to learn and trade along every morning at the opening bell. I'm going to put all the important links you'll need to learn the entire strategy. Again, everyone loves all the trade examples I include in that short video course. So start there first, start making money on your own, then come join me in my trade room and we'll do it together every morning at the opening bell. In the meantime, guys, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.